Well, it is cooling, but the cooling does not involve significant layoffs. Partly it's people joining the labor market, so the supply of labor is increased as people who've come back, labor force participation has moved up. Also, the strength of demand has cooled. You see that in a decline in the number of openings. The number of openings relative to the number of people looking for work is still quite high. That's a very healthy labor market, but not quite as hot as it was. And the fraction of workers who quit their jobs, that's sometimes a metric that gives some insight into the just how hot the labor market is. That was exceptionally high, and it's also moved down, but moved down to the kinds of levels we saw pre-pandemic. So we have a good, healthy labor market, but not quite as hot as it was. And that's important because obviously our objective is to bring inflation back down to 2%.
And you have been a big believer in the soft landing story. We've seen it play out so far, but aren't we just starting to see the impact of the lagged effects of Fed tightening, 525 basis points? How do you think about the timeline there?
Well, there are lags in the impact of monetary policy on the economy, and we would expect to see some impacts. I think we've certainly seen it in the housing market. But look, we still have a good, healthy labor market. Consumer spending remains quite robust. We've seen strong industrial production. I don't see any signs that the economy is at risk of a downturn. And this is the best of all worlds, to see continued strength in the economy, a good, strong labor market, and inflation moving down. And that is what we're seeing.
Do you have a time frame in mind of when we might see that peak lag and how severe it would be?
Well, I don't think anybody knows for sure, but credit continues to be available, although the rates are clearly higher. That does make a difference, and it has made a difference in some sectors. But we're seeing some cooling in the economy, some slowdown of growth off record high levels, which is appropriate when the economy is operating at its potential. So I'm pleased by what I see in the economy. I think we're achieving lower inflation, which is, of course, very important to households and a tremendously important objective, but still a good, strong labor market.